Here are 40 must-know facts to pass the personal lines insurance exam. Grab this as a free cheat sheet, just search PrepPass.org. Let's go. Part C of the personal auto policy is uninsured motorist and underinsured motorist coverage. Insurance Code Section 1861.05, the rate provision of Proposition 103, makes California a prior approval state. California TNC law breaks the driver's exposure into 3 periods. California UIM under Insurance Code Section 11580.2, p. is a difference in limits coverage. Part F is the general provisions of the PAP. Under Part A of the PAP, an insured includes any person using the covered auto with the named insured's permission. Title 10 CCR Section 2695.5, b, requires the insurer to acknowledge receipt of a claim within 15 calendar days. Section 1668 lists 14 grounds for license denial, including dishonesty, fraud, material misstatement, and lack of integrity. Insurance Code Section 1875.20 etc. The CEA, created by statute in 1996, is publicly managed but funded by participating private insurers. The California Fair Plan, created at Insurance Code Section 10090 and following, is the basic form property insurer of last resort. Insurance Code Section 11629.7 and following limit the low-cost auto program to qualifying low-income drivers. The personal lines license under Cal. DP1 settles dwelling losses at actual cash value, ACV, which equals replacement cost minus depreciation. The 80% coinsurance requirement means the insured should carry at least 0.80 times $500,000 equals $400,000. Coverage B, other structures, is automatically provided at 10% of coverage A. DP2 adds the broad perils on top of the DP1 basic list. Under every dwelling property form, personal property is settled at actual cash value, ACV, by default. Theft is not a base peril on any DP form. Earthquake is excluded under every dwelling policy form. Coinsurance penalties apply to partial losses, not total losses. A PUP sits over underlying auto and homeowners liability coverage. Scheduled personal property removes the unscheduled special limit cap on jewelry. Water that backs up through sewers or drains is a standard exclusion in the unendorsed HO3. California insurers that sell residential property coverage must offer earthquake insurance. Standard homeowners policies exclude flood. HO4 is the renter's/tenant's form. Coverage F is a goodwill, no-fault coverage. Standard homeowners forms exclude liability arising out of business activities. Umbrella underwriting requires that the insured carry specified minimum underlying liability limits. Motor vehicles are largely excluded from HO coverage E. Personal coverage E is not limited to the resident's premises. HO3 is the standard owner-occupied form. HO5 is the comprehensive form. HO4 is the renter or tenant form. Coverage B is set at 10% of coverage A as additional insurance. The standard minimum coverage E limit is $100,000 per occurrence. Open perils coverage reverses the presumption. The CEA is a privately funded, publicly managed entity created after the 1994 Northridge earthquake. Flood, including surface water and the overflow of streams or rivers, is excluded under every standard homeowner's form. Want all 40 on one page? Grab the free personal lines insurance cheat sheet and the full practice test, search PrepPass.org. Good luck on your exam.